Welcome everybody, it's the Flow Show, Thursday the 15th of January, and a bit of a slow morning. We've had a bit of data out from the UK, which was a bit of a surprise, but not that you'd know it looking at the pound's movements, but we'll get into that in a bit. Before we do, and just want to remind you all, as I've done all week, that we've got our sale going on the TFP program. There you can grab a 30% discount on all our plans. Jump in there before it's gone. 18th of January is the time that's going to expire. As you can see there, 1 minute to midnight, not the 2 minutes to midnight. See if you can guess the band behind that song. Oh, there's a little quiz for you on a Thursday afternoon. It was 6 minutes to midnight. See, I can't even remember myself. Anyway, morning, Kay. How's your heavy metal band names?
Good morning, Ryan. I zapped what you just said. I don't know what you're talking about. So, what was the question? Can I call a friend?
Yeah, you have 30 seconds to call a friend. No, I'm right. It's 2 minutes to midnight. Name the band. There you go.
Yeah, I don't know, mate. I really don't know. Can I ask ChatGPT?
We've got no, that's cheating. We've got 20 people currently logging in on Zoom, so you've got to guess who wrote the song 2 minutes to midnight.
Okay, I know because I googled it.
You cheated. You bloody cheat.
But I won't say it. I'll leave you to give the answer.
I'll give the answer at the end. There we go. I might even play it. Given what's going on today, there's not a lot. I might even just play the song and we can put our feet up for a bit.
Shall we do a quiz today?
David says you're right.
David, yeah. No, David. I mean, no. Good elevate.
Man, I'm surprised you don't know. God, blimey. Anyway, right. Okay, I'll give the answer at the end if no one gets it. Right, let's go. I've lost my way already. Never a good start. Right, over in Japan, have I got the right dates in the calendar? Probably not. Where are we? Thursday. We had PPI data coming in as expected year-on-year, 2.4%, a little bit off the prior month's 2.7%. BJ's Ueda out and about again, saying that the wage price cycle is likely to be sustained. So I've got to pause. Ali, if you get this one right, mate, then I'm going to bring you on the show.
Yeah. Just going to say.
Who wrote the song 2 minutes to midnight? That's the question, mate. Right. Okay, let's move on. BOJ Ueda says the wage price cycle is likely to be sustained. We've had a sources piece out saying that the BOJ are likely to hold rates in January. But there is maybe going to be a little bit of a switch because it says the BOJ is potentially going to pay more attention to the weak yen than before, with some BOJ officials see a rising economic hit from what the yen is doing. And a weak yen may impact the bank's policy path going forward. Now, it should be noted, they have talked about FX and the level of the yen in past monetary policy meetings. They have even indicated that it could guide what they do with monetary policy as well. So this is a bit of a step up. We were discussing this a lot in our room, talking about the intervention thing and, what the drivers. You all should know by now that the checklist of, what we go through to gauge how close we are to intervention. We've got the weak yen. That's of no doubt, as we've been pointing out by the yen index. According to the powers that be, we've got the speculative nature of these moves. But what we don't have is the speed and volatility behind these moves. We're not moving 300 pips a day. But I think we are in a situation where the weak yen is becoming the bigger problem rather than the volatility. So that is something that they pay attention to because it probably does have a bigger, it does have a bigger economic impact for the Japanese economy, as opposed to the speed. So K, it's not really, we can't really call it a switch, and these guys never need any excuse to put a pause on things or raise the risks. But is the level of the yen becoming a bigger problem than the speed and anything else?
Well, I think so. I think so. The interesting thing about in those Bank of Japan comments was the add-on, because we've seen in the months prior that they were talking about the yen level, but mainly as a factor to push prices up. Now they're adding the economic growth side of things to it. That's going to give the Bank of Japan an extra excuse to hike a little earlier. Most of the commentators are expecting them to rise in the second half of this year. I would say, and I'm for sure not going to rule out May, because that's their first meeting after the start of the new fiscal year. If yen would still be weak by then, and without interventions, I guess we can assume it would be. That's going to give them an excuse to hike a bit faster. And then for the MOF, yeah, I think they have switched a bit. Mimura was clear enough. We need to adjust our cheat sheet a little bit for what the MOF priorities are, and I think we have to push the level of the yen, and especially, and we've been talking about that for months, literally, that it's not the dollar yen. If it would only be dollar yen, with dollar really being strong, if it would only be dollar yen, there was maybe an easier way out of this. But it's yen versus absolutely everything, and that is due to Takaichi, due to actually the snail speed of Bank of Japan's hikes that we have been seeing now for the past 2 years. Yeah, so they have to look at the yen weakness rather than speed, because it's been, let's face it, it may not have been 300 pips a day, but it's been so thorough, gradual, and incessant, that yen weakness, that now they have to put it on top of their agenda.
Yeah, I mean, if you look at it from a really wide perspective, we're going from this sort of weakness all the way down, and now we're heading all the way back up again. So yeah, you could say this phase is Takaichi, but it's not really. It's a continuation of a phase that's been running for going on 15 years now.
Yeah, but that's Abe, right? That's right after the big quake, change of regime, change of economic approach, putting a Kuroda at the helm of the Bank of Japan, who has injected tons and tons of money, at the same time putting large stimulus in place. That was something. I mean, similar, because Takaichi is kind of compared to Abe, but without Kuroda at her side. So that has changed. But yeah, I mean, it's been going on. I mean, Japan has been trying to get out of that spiral for the past 13 years basically. But it's still a kind of a continuation, Takaichi versus Abe, right?
Yeah. It's just funny how when the economy and inflation and they're in deflation and all that stuff, you see the yen strengthening, and now it's all counterintuitive. The economy doing better, inflation picking up, should be good for a currency
Well,
anywhere else except Japan.
Yeah, that's been the big thing about the yen in deflation. We could spend hours on
Yeah.
discussing the deflation versus inflation impact on the currency. Usually deflation, and you can go back to the late 1980s, 1990s in Germany. Compare it. Germany was rock bottom interest deflation, and the German mark was only strengthening. So Japan has been going through that same kind of phase, also being a safe haven for a long time.
Yeah.
But now they're desperately trying to get out of that, albeit with a central bank that's trying to hike rates. So in that aspect, it's different to what's happened over the past 12, 13 years. But there are a lot of similarities, and then I would especially say the stimulus side of things.
Yeah, yeah. So yeah, we'll move on for that because there's not many of our traders who are looking on looking at this on a longer timeline as we do,
No,
mate.
because
So,
yeah, and as I said, we can discuss this deflation inflation impact on a currency for hours, and there's going to be 180 degrees opposed reasons and comments, and they all have their reason to be there, but
yeah,
and they're right to be said, but I've been saying it for since I joined the community as well. I said, be careful to buy a currency when the inflation is ticking higher, because it's not always working that way.
yeah, absolutely. Well, let's bring it back closer to home because we've got an election coming up in Japan, and there's already been some movement around between the parties. So, two opposition parties, CDP and Komeito, are talking to form a new party. I think there's pretty much an agreement there to form a new party. Now, if we just take it at current numbers, the ELDP are obviously the leading party. They're in a coalition with Nippon Ishin, or the Innovation Party. They currently hold 231 seats. That's just too short of an overall majority. At current numbers, CDP with Komeito would hold 172 seats. So if things stand as they are, then the status quo will not change. Now, what Takaichi is hoping to do is use her popularity numbers that she's been getting to strengthen her party.
We don't hear you anymore, Ryan. Yeah, we lost Ryan.
Or the yen.
We
Is it
lost you
that?
for a minute there, mate.
What? Sorry.
We lost you for a minute there. You were talking about Komeito, CDP,
Oh, did you?
getting together. Yeah, but
Yeah. So
you're back now.
yeah. So I was saying that she would hope to get an overall majority on her
Yeah.
own without the need of any coalition again. So what's the risk, do you think, for the market? Will the market get expectant that she can get that overall majority, or is there a risk that she doesn't and she falls short again?
I don't know what the market thinks. I know we have seen what some commentators think, because they say like, oh, there's a risk for Takaichi. Yes, there's a risk for Takaichi, but then as I said, she's got 70% plus approval rate right now, especially with the younger generation. And I'm going if I'm not betting on any of it, but if I would bet, I think she gets it. And as you said, CDP Komeito together can't get a majority, so they're going to need at least one other party to join them, and a party that would get quite a bit of votes. And unfortunately for them, the next party is one Ishin, who is now with with the LDP, and the rest of them have not garnered enough votes on the prior election. So commentators say, yeah, fiscal discipline on one side versus fiscal looseness on the other side. But I think Japan, to me personally, is going to vote for somebody who's taking Japan out of the slump that they have been in for decades, and looking up. She talks pretty well as well, and I think the Japanese people like the fact that she's standing up against China, that she doesn't let Trump get away with everything he wants either, and then that she does a heavy metal
Exactly.
jam session with the Korean guy.
Exactly. That was absolutely. I didn't realise she was a metalhead, and she is actually a former
She
drummer. So
she was made. She was made. I mean, you should see her when she was younger. She is a surprising lady, you know.
she rocked. I bet she knows the answer to my question,
Oh
Lee.
yeah, she must know.
I'll have to ask her. But yeah, but again, it's another counterintuitive thing. You know, fiscal tightening. Yeah, that's good for the yen, but it's not that good for the economy.
No,
So yeah, you know, it's
no.
a mess. But we'll deal with that in February when that election has to come. But we'll pay attention to what the market is doing with expectations for that. Right, speaking of the yen index had some small relief today, up to 73.78 from 73.55 the day before. So that's because the yen stopped weakening for a bit yesterday. We'll see how long that has lasted. Right, moving over to the Bank of England. BOE's Ramsden says the labour market is continuing to weaken and that policy rate remains restrictive. It says, and this is typical central bank speak. It says the neutral rate is in the middle of a 2 to 4% range. I mean, why not just say it's around 3%? Why are they going to make a range for it? I don't know. This is the clowns we have to deal with. Always got to make a simple saying hard. Right, UK GDP got a surprise, up 0.3% on the month. Where is it? It's in here somewhere. They've mixed it all about. There we go. So this is the monthly number, rose 0.3%. The rolling 3-month number also improved, was expected to get worse, down 0.2%. It came in up 0.1%. We had industrial production, manufacturing, and the like all posting reasonably good numbers. Construction was a little bit crap though, but never mind that. Now, a lot of talk is about this boost to numbers, about the JLR thing, Jaguar Land Rover, the hack that happened in August, if I'm not mistaken, and it's taken some time to come online. There were bigger numbers in the GDP based on that, which gives a different impression, if you like. Although that's a big boost, the fact that a 26% rise in one part of the overall manufacturing sector, which is only 9 to 10% of the economy, can cause GDP as a whole to rally that much, isn't bullish, in my opinion. It shows that if it wasn't for that, we're probably looking at far more negative numbers. Now, services numbers weren't too bad either, and that's the biggest sector of the UK economy. So maybe, as I said, I've been looking for whether the consumer had a bit of a decent end to the year. That may be in there. I'm not going to say 100% is. Either way, we've had a decent number for November. Let's see if it continues in December, and let's see what happens after we turn over the new year and this potential bounce in JLR washes out. Kay, has any of this data changed your expectations moving forward for the UK's fortunes?
Not for the Bank of England, but yeah, it's quite strange, this market, and that's what happens when you trade such a tight ranges. Yeah, I mean, when I saw the numbers come out, well, I was like really small. I mean, it's not going to affect much in my account, but I was small long euro sterling again from yesterday. Let it go. It went another 5 pips lower, and now we are 5 pips higher than when when the numbers came out. So euro sterling. The effect of data of late is so limited. I don't know whether it's due to those lower vols that we are trading with, where you have much faster reversals of any smaller moves. People desperate to make back the premiums they pay. That may be one of the aspects, or is it just the case that that sterling has ran its course? That could also be the case. I mean, this morning, if you look at those numbers compared to what Europe comes up with, one would intuitively say maybe we are going to see 86 figure a quarter in the euro sterling, and then 2 hours later, it's all finished, right?
Yeah, I think a lot of this lack of volatility around these data points is due to I don't know if you called it the compression of the data. I mean, you know, who's going to get excited about whether it's 0.1 or 0.3? You know, it's a bit different to, you know, 1% versus 2%, that sort of thing. You know,
You had
and
it, yeah. Sorry, you had it in the IP and in the manufacturing production. Those were
yeah,
pretty decent numbers.
yeah, but it's a far more volatile data series. I mean, you
Mm,
know, look at this GDP. You know,
mm.
we've been zero point 0.5 minus zero point 0.5
Yeah,
for
yeah.
3 years. There's, you know, we're not getting this sort of thing that we got. Okay, that was COVID and all that palaver, but you know, we get those sort of variations in US data, but we're not getting that over this side of the pond.
The
You
old
know, neither
continent,
in
huh?
Europe. So,
The old
sorry,
continent.
yeah, well,
The
the
old,
old
but
continent.
that's been ongoing for literally since I joined markets. There's always been this acceptance that a US economy or some other economies will move a lot faster than the old continent economy. But you've got higher peaks and deeper troughs in the US economy, which is a much more dynamic economy than the old continent's economies, and seems that we're still in that same scenario right now.
Yeah, yeah, absolutely. But yeah, I think it's a lack of volatility in data that's obviously bringing a lack of volatility in price moves. But you know,
Yeah.
we need to watch for the trends. It's, you know, we haven't been bearish on the UK just because we thought November's number was going to be a wonky one.
Mm.
It's how things are going to transpire over the last 6 months and the next 6 months. That's the way you have to view it. Either way. Market has repriced expectations for further Bank of England rate cuts. We now see just under 2 cuts in 2026, 46 basis points. So a bit of a marginal move there. Right, staying with the data, go back to look at yesterday's data, retail sales and PPI. I'll just talk about PPI because it's there first. Well, I just want to point this out very, very quickly, just in case you see this. A big jump in mortgage applications yesterday from the NBA. This is the normal beginning of year stuff. This is for last week, which is the first week of the year. Obviously, things go a bit quiet into the end of the year. No one's taking mortgages over Christmas. So you tend to see these big jumps. Prior years, we've seen 33%, 29%, whatever, 10% jumps. So don't get too excited about that. Anyway, PPI came in, I'd say, depending what one you want to look at, quite significantly higher. One of these core meeting numbers came in 3.4%. That would have been a higher number in that core number, but the prior got revised up. Headline PPI was a bit softer. Again, there was an upward revision to last month. Overall, sticky numbers from that. Retail sales, that came in A-OK. No massive shocks in there. So the consumer continues to spend. Existing home sales also in the positive for December, 4.35 million. Prices holding up okay. There was a little bit of a move down from last month, 405,000 from 409,000, but we were still up 1.2% over last year. So the data still looking okay in the US. Fed's cash and carry said the Trump administration's threats are about monetary policy, taking perhaps one of the stronger lines amongst Fed heads since this Powell stuff cropped up. He says inflation remains too high, even if it is moving in the right direction. He says the economy has been more resilient than he thought. And that makes him wonder how tight monetary policy really is. Then he highlighted the dilemma at the Fed. If we cut rates and that makes the inflation problem worse, are we really helping families? It's the old rock and a hard place, because remember that when you cut rates, you can stoke inflation, and inflation is already sticky enough as it is. That's obviously something that Miran likes to ignore. Fed's Gall's Beast says central bank independence is the key to low prices. Don't ask me how it comes to that conclusion. Fed's Paulson sees further rate cuts later this year if forecasts are met. He says he's watching January data for any tariff-driven price increases to show. Now, there was a headline that popped up yesterday saying that Powell may not testify before Congress. We got a Humphrey Hawkins semi-annual testimony to the banking financial committees in February, and that headline popped up. So there's a bit of chat about, is that him not fulfilling obligations or what? I looked into the context. Apparently he won't appear if he's subject to this ongoing investigation, or if it's an open criminal investigation, which I don't think we're at that point. Yes, they've had subpoenas, but it's for information. I don't think he's been indicted for anything yet, has he, Kay? So he's not. This is like an early stage thing still.
No, yeah, he hasn't been, but usually subpoenas are followed by. What I saw that is he did hire already a lawyer's firm who are supposed to be really strong and hard and fight until the end. So he did engage the bazooka himself, but yeah, usually subpoenas, let's say 7-8 times out of 10 they're followed by indictments. But then Trump's statement yesterday that he's not going to do anything about Powell right now, that he has to go. He will see how things will develop. We may be at the end of his chairmanship at FOMC by then, right?
Yeah, and I suppose it does raise the issue. If he is indicted on anything, Powell, how does that affect his whole chairmanship? Is he banned from monetary policy meetings as well as things like testimony?
I guess somebody who is indicted at an official instance like the Fed can't sit in his seat, right? While the lawsuit goes on, but really, is it going to go that far? I have my doubts.
Yeah, we shall see.
Because that letter that strategically came out yesterday, where he clearly explained everything to Congress, that all of a sudden popped up, and seems that the Department of Justice had forgotten about that one.
No, yeah, strange. But as you're right, Trump said he told the press that he does have no plans to remove Powell, irrespective of the probe. Right, moving on. Fun and games yesterday in the old SCOTUS watch. Everyone glued to their screens at 10 a.m. Eastern time, and then they said we're not going to get anything. So we're going to have to play the game all over again. I think next week, the 20th or something, might be the day when they drop something. So this is becoming a bit of a farcical. I think those justices and judges and whatever are having a laugh at our expense, threatening to drop this thing on us, and then not bothering, watching everyone run around with their pants on fire. So yeah, a bit of a shit show yesterday regarding the SCOTUS decision. It will come when it will come. US Treasury Secretary Bessent threw up some comments after his meeting with Katayama. Says he does not desire excess exchange rate volatility with Japan. It's important for communication over monetary policy. Not saying that's a green light for any intervention or anything like that, but and the lines he uttered could have been written by Katayama herself. Right, Greenland. All this stuff going on. The Danish Defence Minister says we will have a bigger military footprint and more permanent presence on Greenland going forward. Apparently, they are moving a few soldiers and equipment and whatnot to Greenland. Germany is apparently sending soldiers to Greenland this week as well. Good luck to whoever got the short straw in that lot. Make sure you pack your gloves. Danish Foreign Minister Rasmussen says he had frank and constructive discussion with US officials yesterday. This is obviously that meeting that they had. He said they still have fundamental disagreements, but will continue to talk. And he said that they did not manage to change the US's position on Greenland. So again, we'll see what happens with that. A bit of, potential, I don't know if you call it potential easing or not, in tensions in Iran, at least from Trump's side. Apparently, there's been a promise from Iranian regime not to kill any more protesters. So that's potentially staying Trump's hand, although apparently there's been a lot of movement, military movement over and around Iran. There's been travel warnings for people going to Israel. Air traffic over Iran has come to a grinding halt. So obviously maybe there's been some movements that have pushed Iran into this. But anyway, oil has had a little bit of a blip down, a little move down on the back of all that, that Trump isn't going to start sending over bombs and whatnot. Ukraine stuff. Russian Foreign Minister Lavrov says talk of ceasefires in Ukraine is not serious. Says Russia is ready for contacts with US's Witkoff and Kushner. There's talks about a meeting happening later this month or next month. Trump is out pointing fingers again. He says it's Zelensky, not Putin, that's holding up the Ukraine peace deal. So Zelensky back in the bad books there. Anyway, as we know, this situation rumbling on. It's fallen towards the back pages the last week or so. And that's that from the headlines. Kay, anything else?
More than enough, mate. More than enough.
Good, good. That's what we like to hear. Right. I haven't even looked at what we got coming up today. Been busy. Let's have a quick butchers. Have we got anything of note? What have we got? What have we got? Ah, right. So we've got Empire and Philly Fed kicking off the manufacturing month for January. Obviously, jobless claims as well. Sorry, mate, you got to...
No, that's... I was just saying Philly Fed employment, weekly employment.
Yeah. So not huge numbers, but it give us a little bit of an insight into the manufacturing sector, which has been crap for a long while now. Maybe there's a bit of New Year pickup. Who knows? We can but hope. Right, let's go on and have a look at what's happening. Right, let's get into a bit of a short-term chart. Right, I'm just going to rush through a couple of these things. So we had dollar yen coming down to this old broken resistance level. We did have a nudge through down to about 158, 10, 11. But by and large, it's held. We've had a bounce back up. Hasn't quite got up to near the 159 area. But it is on the creep back up slowly. Okay, there's not really any input from the US dollar side at the moment, given all the data and everything, though, things aren't looking too bad. But this doesn't seem to be in any rush to, rocket back up to 159 like it might if the specs have been heavily shorting it. Do you think there's a little bit more nervousness about taking this higher?
Well, there's definitely a bit more caution. That's, I think, clear now. There's a bit more caution, but for those wanting to build off a little bit of the short yen positions that they had, they do seem to find enough liquidity because we are shying away from the lowest levels in the yen, but you're not really ramping higher in yen either. And testifying yesterday, that little dollar yen blip down to 158, what is it, 15 or something like that, is right on the prior little high, and we are talking about the start of the year, right? So it's just very short term, but you're already holding that low there. So that means that the market is not really ready to let the bone go. So and I think, excuse me, I think we can be a little longer in this kind of scenario. But if then the Japanese go quiet and we don't see an intervention, we're probably going to go back down in yen, up in those yen crosses, etc. Because the natural way, even if we have reduction in yield differentials and quite a nice reduction over the past year even, it's still costing money to be long yen for longer. So yeah, it's I don't think the story is over unless, of course, they intervene. But and the risk is still very high. Are they preparing something? We don't know, but yeah, the risk is still very high. But that's also the thing in the market, right? Psychologically, do you want to continue to hammer a currency while already having sold it for such a long time. Because let's only take the elections. Where was that? October. Um, that's already 3 months of yen selling, right? And so I think that's yeah, they've already been selling yen for quite a while. So yeah, a bit of caution. You don't continue to push too hard, but on the other side, it's still holding. All those yen pairs are still holding.
Yeah, yeah. You know, if you were buying it down here, or people that were buying it down here, they're not even going to be that necessarily worried about an
Mm,
intervention for 400 pips up
yeah.
here. It's going to be the short termers who have been buying it, maybe buying a break 157.
Mm,
They're the ones who've got to have to watch their asses
yeah.
so it doesn't get handed to them on a plate.
I think for the more medium term, if you go back down, not saying interventions, but back down in a natural way, under 154.5, 155, then they are going to run the medium termers.
Yeah, yeah, exactly that, exactly that. Dollar CAD's having a little mooch up into 139. This is another snail, but it's going well, depending on your positioning, it's going in the right direction. I'm long, so this is going my way. I want it to build a case in 139 though, and then go and have a look and take out those highs. There's still plenty of traffic above. We've got this area here, this zone up at 139.45 near 60. That's one to keep an eye on if we do push up that high. You know, the pain level below is still at this 138.60, 70 area. Euro sterling, not doing an awful lot. We're trying to have a go at the top of the zone. Otherwise, it looks like we are stuck in this perhaps for a while unless we get something big happening, maybe in the dollar that sees a bit of a speed move going on. But fundamentally, I think we're going to be picking our nose for a while in this pair. Right, Mr. K, I'm going to bung it over.
Yeah. Yeah, so first of all, let's have a quick look at what happened on those metals moves when Trump said something about Iran not being ready to kill more people or so. We had a speedy drop there in silver as well, together with the oils, etc. A speedy drop, but again, look at where where it held, and that is extremely short term. It's the 12th. But even that high here, we retested that low on the 13th before flying to a fresh high, and that big drop stopped right there. And in the meantime, we're already back above 91 bucks. Again, I think it's a tactical statement that Trump made yesterday, perhaps to get U.S. people in a safer way out of Iran. Something like that. And that's what the market is kind of leaning towards to as well, because otherwise we would be hanging around here and not being back above 91. And gold is doing exactly the same thing. We had that blip lower yesterday. Maybe if I go on the 1 hour, you'll see it clearer. We had that bit of a move lower here. From last night and into the morning, and then it's already coming back. And what happens is that, and they're also really short term. This is only this week. We're already holding that mini trend line which has been formed by those prior lows, without even going to tackle or to test really the 45.5, which is the first real intraday support, that decent support, I would say. And this is just a bit of a line in on a picture, but having already bids ahead of it is also telling us enough of a story. And I think the market is really reacting in the way that, I mean, this could be really a bit of a tactical statement, and the overall situation hasn't changed, and we see quite a similar movement, with a bit of delay, has to be said, in oil, and then especially Brent. Looking at that sharp pullback, another leg down, but we are like slowly catching up again and getting back above 64 bucks. Talking about Brent, look where we stopped, because this is an area that I'm actually looking at. Wasn't planning to go short straight away, but I think it's worth it's worth keeping that zone in mind, and that is towards 67, 67.30-ish. You see a lot of traffic around here. You see those prior spikes coming close. Yesterday's spike also coming close. So that is an area that I'm going to keep a very close eye on. Maybe, excuse me just for 1 second. Maybe just for a spike higher and then come down, depending on whether, if they decide to go into Iran, which is still a very big risk. And we see that spike here. If we see a bit of a spike above and then letting it go, it may just be one of those other spikes that we have seen over the past years, even the past 3 years, that such a big spike, breaking a bit of levels, and then all of a sudden coming back down. So, but let's see how hard they will go in there, or how bad the situation can get. But I would keep an eye on what's happening in Brent around 67, 60, 67.30. The rest is snail's pace. The option vols are too low to go anywhere fast. Euro dollar still within that 116, 10, 20, 117, around 116. We do see lower highs, okay? 117 capping, then 116.80. Yesterday, quick try, but couldn't go above the 23.6 at 116, 62, 63. It still feels a bit slippery to me, but it could just be a very, very slow mover as well, just because of those very ultra low option vols. Ali, I've seen your Aussie. Everybody can have an opinion, but I don't see why you would be really short around here, because that 66.60 is holding rock solid. And okay, even though we didn't really retest it, it's still in the 66.60s. We continuously finding bids. Equally, you put your stop at 67.18. I'm just going to simply comment on those highs that we have seen here. Those are levels that we have been watching. 23 up to 28, call it 25.30, 20.30. Your stop at 67.18 is very vulnerable. The slightest uptick, just a retest of that 67 and a quarter, and you're going to be stopped. So I'm in doubt, if I may say honestly. I'm in doubt about your entry and your stop both. Okay, maybe you're looking at something much more shorter term, and I'm not here to judge people's positions, but the entries and the stop is not really well placed, in my opinion. That's just a personal opinion. Yeah, I know about the head and shoulders. A lot has been talked about in our room about these head and shoulders. It's still possible, but we have to acknowledge this hold all the time. Okay, so I wouldn't trade it before it really happens, and we break through 60, 65. Okay. Ryan, I think looking at the clock, that's okay, mate. All the rest is quick look at dollar mix. Maybe that continues to just slip and slide. Don't change a winning team. We are back below 80, 85, 87, and probably 1765 and then 1740s, unless we start to break back above 1805. And with that, mate, back over to you.
Thank you very much, mate. Good stuff as always. And I'd like to thank everybody who comes to the Flow Show, supporting us here. Have a great day ahead. We'll catch you later on the Face Show. Otherwise, we'll see you here bright and breezy.